Welcome to the Health Coach Nation podcast. My name is Hailey Rowe, and I'm a sales and marketing coach and LinkedIn lead generation service provider. I work with health, life, and mindset coaches and online service-based business owners to help them get more sales, shift their time to the client-generating activities instead of just the busy work, and overcome that social media overwhelm. Let's get into the show. If you're ready to take on your next paying clients, I have good news. My free 4 Basics of Client Attraction and How to Stand Out class is live at haileyrowe.com/client-attraction. In the class, you're going to learn the top 2 traits I recommend for most coaches and entrepreneurs if they really want to turn this into a career. You're going to learn how you can build demand for your services and stop getting crickets on your posts. You're going to learn the sales roadmap I used to improve my sales conversion rate and help my clients do the same. And you're going to learn so much more. So go to haileyrowe.com/client-attraction and get your copy of the class today. Hello, I am live today with Dr. Sherry Peel Jackson, and she is going to share her background. But for those of you who are business owners, maybe you're a new coach or a new business owner, and you're getting used to having to do your own taxes, having to, do bookkeeping for the first time in your life, or have an accountant or a bookkeeper. This kind of topic is going to be for you today, because we're going to be talking about some tips for your taxes, some tips for more financial freedom as a business owner. So first, Dr. Sherry, why don't you share a little bit about your background, what you do, and how you got into helping people with their finances?
Well, thank you first, Hailey, for having me on. I decided when I was about 15 years old that I was going to have some kind of career that had to make money because I like nice things. At least my dad told me that. So I chose accounting and graduated college with a bachelor's in business administration. And then I went after my CPA. Of course, that takes some time. So I worked for CPA firms for 2 years, which was the requirement, and got out of that because there was too much travel and I didn't like the travel. It would be nice if I was going to places like New York and LA, where they were sending me to Podunk, Mississippi, and all these crazy places, and the hotels were, so I said, no, we're going to do something different. So I spent a little time in corporate America. I didn't like that because a lot of times in corporate America, it's not what you know, is who you know and what you do with who you know. And I didn't want to continue with that experience. So I looked in the newspaper one day and I saw a ad for the Internal Revenue Service. So I said, okay, I'm pretty good at math. Let's try this. I went to the interview. I got hired on the spot. And from then on, for 7.5 years, I was an internal revenue agent with a CPA. So that's how I got started, helping people to keep, protect, and grow what they earn.
Amazing. So now that you have been in this field for so long, what are some of the common things we need to know if we are just getting started or just became an LLC? I see a lot of my clients who do that. Tell me a little more about some starting point foundations to be aware of.
First of all, I commend all of you for starting in a business. That is what I recommend for all of my clients. The tax code is written for businesses. You have to understand that an employee cannot write off their cell phone, their laptop, their mileage. But with a small business, you can do that. And I always recommend that they do a home-based business because there's no need for you to have 2 rents or a mortgage and a rent. Just do it in your home. There's tons of deductions. You can write off everything but the kitchen sink legally if you start your home-based business. So the first thing that I would recommend for the business owners, the starters, and the ones who've been in business for a while is to make sure you properly keep your records. You do not want to fail an audit. When you fail an audit, then you become a target for other years. When you win an audit, they usually keep you off their radar screen for a while. So I advise my clients to keep the records the best way that they can. A lot of people are into tech. I'm not really into tech. So they'll go into a store, let's say, and buy some copy paper from Staples or somewhere. They'll scan in that receipt to their phone, and then that receipt will get to their QuickBooks. That's a way to do it. Some people keep the paper receipts. I'm one of those. You have to be careful with those paper receipts, though, because they make them on this paper now that disappears. So if you leave it in the car and the sun gets on it, it's gone. So my clients that aren't technologically inclined, which I do have some, I have some up into their 80s, I have them get a copier. So that'll be a write-off, a copy machine. And when they get the receipts together, they copy them. So when you copy them, that copy paper is not going to fade. And I have them staple that slick paper to it so that if it fades, they still have a receipt. When I was an IRS agent, the thing that really decimated people's businesses was because they didn't have records. They didn't keep them. You cannot use your debit card statements or your credit card statements as records, because they'll say, well, you bought some copy paper, a whole box of copy paper for $46 at Walmart. We don't know that was, for your business, or, that's just, it's not going to show up copy paper on your debit or credit card. It's going to show up Walmart. So if you didn't keep the receipt, they're gonna not let you have that deduction.
Interesting. Yeah. Okay. So having those receipts, that's very, very important. And using maybe a tool like QuickBooks, or I know there's other ones out there as well, to maybe, if you want to digitally keep track of things. Yes. What are some other things by the end of the year? Because I know you just mentioned that there's a new act that we should be aware of. So maybe tell me some things that business owners should be aware of in 2024, 2025, that kind of thing.
Okay. So there's, unfortunately, what we have, the Corporate Transparency Act. They want to know the beneficial owners of an LLC, a corporation, or any company that you went to the Secretary of State to register. So if you're a sole proprietor and you just started a business and you did not register it with the Secretary of State, you don't need to be worried about the Corporate Transparency Act. But if you went to register your business, whether it be a corporation, a partnership, or just a sole proprietor, LLC, it's supposed to be registered. Now, if you started the business before January 1st, 2024, you have until December 31st to register that business. If you started your business in 2024, you were supposed to register that business within the first 90 days of the business starting. And if you are planning on starting a business in 2025, you will only have 30 days to register. The penalties are $500 a day, $10,000, and possibly 2 years in jail cumulatively. They're serious about this. An Alabama judge called it unconstitutional, and they admitted there was a lawsuit, and it was a American Small Business Association that filed the lawsuit and said, this is unconstitutional. You're not supposed to, Congress doesn't have the right to go into our privacy like that. The judge ripped them apart, and FinCEN, which is the organization that is enacting this, the Financial Crimes Enforcement Unit. So they're supposed to be looking for money launderers, but they're bothering our small businesses. They said, okay, well, yeah, we understand that it's unconstitutional for the people that sued. So those people that on March 1st, when this ruling came out, if they were a part of the American Small Business Association at that time, they don't have to do this, but everybody else does. And if it's unconstitutional for them, it's unconstitutional for us. But that's how things roll. And I suggest that people go ahead and do it. I'm going to do mine like December 15th, just to see if anything changes, because it's too much. And so they have to do it. I want to make sure that your clients know this, because I don't want them caught up in trying to deal with the FinCEN on these fines.
Yeah. Wow. Those are some big fines. So how does somebody go about that? I know, is this the same thing? And I might sound really dumb here, but is this the same thing as the BOI, like filing thing I might have filled out? Or do you know anything about that?
Yes, that's the same thing. It's the beneficial ownership. Yes, that's the BOI. But it's enacted by, it's the Corporate Transparency Act that brought it into play. So if people don't know about the BOI, the Corporate Transparency Act, they need to look that up immediately and get that taken care of. I'm hoping that they give people slack. A lot of people still don't know about it. Wow. So if they miss the deadline, there are going to be so many people. I'm hoping that they just toss this thing out. And because it's really, you have to fill out, if you've already done it, Hailey, it's your name, your address, your telephone number, uploading your driver's license. And you know what? We've been hacked so much that my concern is that, not that they're going to share it with all federal and state agencies. And then those people have databases too that get hacked. So it's a concern. It's a concern for those of us who have companies that we've set up for privacy.
Right. Right. That's crazy. Yeah. Okay. What are some other things we should do if we want to not, have issues if we ever got audited, or we want to be prepared? We want to have our books in place and do it well. What are some tips and recommendations?
Well, as far as the books and records are concerned, the way that I have my clients set up their books, if they don't do the scanning, if you do the scanning and it goes into some kind of a software, you just make sure that those receipts are somewhere on an external hard drive, just in case your computer fries or something like that. You want to have the receipts on there, because when you scan them, they are legitimate copies. And then once you scan them and put them on an external drive, you save that as if it's part of your records for that year. So the ones that keep paper receipts, I encourage them to keep their paper receipts by category. So the categories on the tax return, specifically the Schedule C, you have your advertising. So all those go in one folder, your postage, all that goes in one folder. A lot of people, for whatever reason, file their receipts by month. That does no good. File them by category. And when you add up all of your receipts, keep them in those folders and put the adding machine tape on the front. So if you get audited, for example, if you've written off $792 for advertising, you already have that in a folder with the adding machine tape on there. As a matter of fact, Hailey, the fastest audit that I ever had, it was called a TCMP, the Taxpayer Compliance Measurement examination. It was supposed to take days because I was supposed to audit every number on the tax return, which is unusual. So that's a special project. And I was planning on being out there 3 or 4 days, but I was out there 4 hours, and I was amazed because for every number on the tax return, these people had a folder with all the receipts. They had also copied the receipts for me, and they had the adding machine tape. So all I had to do is look at the tax return, look at the number on that line, take the receipts out of that folder, re-add them up, take my copy of them, which they gave me, and move on. And so that was the perfect audit. And I told them at the time, I don't know where you got this from, but I'm going to share it with everybody, because if you have all your receipts in one folder and you keep them in one folder, you're ready for anything.
Yeah, definitely. And what about when it comes to, I know one of the things that if you're an LLC and you have subcontractors, you have to send out 1099. So tell people about how that works and when the deadline is for that and all that kind of stuff.
Okay, so the 1099 has to be precluded by the W-9. Every time you bring someone in, you have to give them a W-9 because you have to figure out their status. Who are they? Are they an LLC? Are they a sole proprietorship? Of course, you don't have to give a 1099 to corporations. So if they are a corporation and they have their corporate ID or EIN, and you don't have to give out those for corporations. However, for sole proprietorships and general partnerships, you want to give them the 1099 if they have been paid over $600. I believe those are due at January 28th, at the end of January in the year. So you want to go and get one of the little programs. There's Adams, which they haven't been doing so well lately, but programs where you go in and you key this information in, you can print those out, and it saves them for the next year. So the clients that I work with, they pay the same people every year. So I just go in and update, put new names in there, and go ahead and print. But that is something that you want to do, because when I was an IRS agent, I had an audit. I audited a construction company, and they paid over $300,000 in subcontractors, and they had not given the 1099. So the penalty is $50 for you not giving them a copy of the 1099, $50 for you not giving the IRS a copy, but also they were told that they would not be able to write off all those people unless they found those people to get their information, because that's a huge one.
Yeah. Wow. Okay. So yeah, definitely wanting to stay organized with that. What about categories? Because like, for example, I do marketing and sales coaching and I work with clients and, I've hired an ads agency and, so it's like, well, our ads agency, are they advertising or is it a subcontractor because I'm working with people with, so how does somebody like, I know part of it will be having a good accountant who can tell you,
Yeah.
but if someone's like, well, what category does this go under? How do I know? What kind of tips do you have for them finding that out?
The way I classify it, if it's some big company that's helping me advertise, then I don't know the people. That goes into advertising. If I'm paying $300 a year for some kind of a streaming service or Zoom, or that might go into advertising. But if I've actually hired people that I talk to face, that company will have to give me a W-9. And if it's an individual, that person will have to give me the 1099 and I'll determine, I'm sorry, the W-9. And I'll determine from that whether or not they need a 1099, but I'll keep the W-9 because in an audit, if I have and I put that under legal and professional services. So the people that help me with marketing, they don't go under marketing and advertising. They go under legal and professional because they're talking to me on a regular, helping me. So all of those receipts from those people, I get their their W-9, and then at the end of the year, they will get a 1099 if they are not incorporated.
Okay, gotcha. And what would you say to somebody who, and this comes up a lot, is like, should I be an SCorp taxed as an LLC or that elects to be like an LLC, or should I be an LLC and not an SCorp? Like, have you heard this conundrum among entrepreneurs?
I have, and I have people that, I'm a retired CPA and I work with a CPA that, she's good at switching people over. It's when you start bringing in over $400,000, you need to start thinking about being an SCorp because, the distributions aren't taxed, but you have to go and you have to do payroll, and payroll is a booger for individuals to do. So I always recommend my clients go with ADP or one of those, but that's very expensive and you have to have that money in the bank on time. So yes, when you're smaller, it's okay to be a sole proprietor or a partnership. Partnership would be, let's say if you and your spouse or you and your brother or sister went into business, it's okay to do that and not go to the Secretary of State. One of the dangers of being incorporated with the S Corp or C Corp is something called piercing the corporate veil. So when I am a sole proprietor and let's say I left my personal debit card at home and I go to Target and I need some pillows, and I was like, darn, I left my personal card, but my business card is there. I can swipe my business card for anything because I'm a sole proprietor. You can't do that when you are a corporation. You can't mingle the funds. It's called piercing the corporate veil because the corporation, whether it be C Corp or S Corp, is a totally separate entity. So people get in trouble when they're used to spending that money and, with that debit card, the company debit card, and for personal things, you can't do that anymore. Also, when you're a corporation, you have to have minutes. So you have to have board meetings and things like that. So if you're not ready for that step, you probably need to not go and do a corporation. Now, as far as a LLC is concerned, in my experience as a retired CPA and a former IRS agent, there's no protection there. If you are an individual or you're in partnership with your spouse or relative or somebody, and you go down to the Secretary of State and you do an LLC, yeah, that's fine. And it might look good, with the 3 letters behind your name, which is what I did. It kind of helps you look more professional. However, it doesn't lend you protection when it comes down to an audit because when it comes down to a lot of things, there's no protection there. You peel the onion back and there you are. So if someone's going to sue you, there's nobody else to sue but you. LLC is not necessarily going to help you. What's going to help you is liability insurance. For example, I have errors and omissions insurance. So if someone says, oh, Sherry told me to do this and it didn't work out and I'm going to sue her, then I have liability insurance to take care of that. It has at least $75,000 for legal fees. There's where your help is. The LLC is not going to help you. This is the United States of America. We have 5% of the population, the world population, but we have 70% of the world's lawyers. There are more lawyers in Jacksonville, Florida than the whole of Japan. And what do? They sue people. So, there's so many lawsuits in place right now. You want to protect your business. You can't build something up and then lose it. You just can't do that. So definitely get the liability insurance. I've seen so many people build up the business, and people are jealous of you when you succeed, or they want to go after your deep pocket. So you really must get the insurance.
Okay. All right. That's good to know. So liability insurance is a yes. And if you're an LLC, it doesn't necessarily just mean you're protected against being sued or anything like that. What is there any other common mistakes or big things that you think new entrepreneurs should know about taxes and their books and all that kind of stuff?
Yeah. So when you do the tax returns, if you're going to try to do them on your own, that's fine. Just do not use estimates. When I was an IRS agent, 99% of the people that got their tax returns done with H&R Block and those kinds of companies had adjustments because they use estimates. So when I look at a tax return, and there are a lot of round numbers, 350, 400, 975, that just screams estimate, which tells me that the person did not keep their receipts or did not bother to add up their receipts. And then there's adjustments. So using, your numbers, let's say if you just kind of stomped on a number, it's like, I think it was about 350, use 357 or something like that if you have to. But we want to make sure that there are not a lot of estimates on there, because you don't want to deal with an audit. A lot of CPAs are so afraid of an audit that they will tell you to hold some expenses back, so that if you have an audit, and this has happened where my clients have said, oh, I had at least $1,700 more expenses, but the CPA last year said, hold those back. And I said, why? This is because if I get audited, we have leverage. And they just lost $1,700 in expenses, in expense deductions because of that. We need not be fearful of the IRS. We just need to make sure that you are ready. You have to have those records.
Yeah. Okay. And is there anything else that, as far as where someone could look for either working with you or a good accountant, what should they be thinking about for that process?
They should be thinking about the experience of that person. Now, a lot of CPAs don't even deal with taxes. The ones that do, they may not have the experience. So somebody that has maybe taken the enrolled agent class, if they're not a CPA, it used to be where any shade tree Joe could do a tax return, but then they tightened up on that, and they want CPAs, attorneys, or enrolled agents. So even an enrolled agent has gone through a class, but you want somebody that, number one, has experience with audits, number two, that is not afraid of the IRS, because if they're not afraid, they're going to take all of your deductions that are legal and not worry about, oh, there are red flags, by the way, Hailey, red flags like, if your travel is high, that's a red flag. But if you traveled a lot for business, just keep your receipts. Some of the other red flags may be if you have a lot of professional services. They want to see if those services were really done, or if you paid for a year and you didn't pay for that year of its service until November, then they're going to try to say only 2 months of it was deductible. So there are certain things that cause the IRS. Having a home-based business in itself is a red flag, because the IRS trains their new agents with small businesses. They don't just hire them and send them to training and then they start automatically working auditing corporations, because they'll scare them away. The CPAs and attorneys at corporations will scare those little new agents away. So what they do is they'll go find small businesses, Schedule C businesses, and try to audit mom and pop businesses. And it's okay to be a mom and pop. If you have your records, you're going to win an audit, and it's going to be what's called a no change, which means there's no changes. So those are a couple of the red flags. In my book, I have a book called How to Stick It to the IRS, Confessions from a Former Insider. And it, has the red flags. And I think that maybe on my website, I talk about it a little bit, but yeah, my message is, don't be afraid to start your business, grow your business, and then write off everything but the kitchen sink.
All right. Well, I definitely will have to put your book in the show notes. And where can people stay connected with you and check you out?
So my website is sherrypeeljackson.com, and my email is connect@sherrypeeljackson.com. I've written several books. My new one I just came out with, co-authored with the great Myron Golden, is Increase Your Income and Reduce Your Taxes. So he talks about, he's the wealth coach. So he talks about increasing income, and then I come along and say, okay, well, here are the tax consequences that you have to deal with this issue.
Amazing. I love that. Well, very cool. Thank you for being here. Thanks for sharing these tips. And I'm sure that the listeners will appreciate it.
Thank you for having me, Hailey.
Thank you.
All right.
Thanks so much for listening to this podcast. And if it's really helpful for you, I'd really appreciate if you share it and or leave a written podcast review. This tells the podcast sites that our show is useful and it will be promoted to more people that way. Thanks again.